now. All right. Just a quick market overview once again. Hope everyone had a good weekend. Just quick disclaimer, nothing you see in this video is financial advice. It's just a market overview for your continued education. Okay, so first off, what I like to do is take a look at how our week candle closed, right? Just to see how the week was going. One thing I noticed, you'll see on QQQ as well. We closed at some a little bit of a hammer candle here, um, which is really good considering we had some lot of downtrend here, and we also supported oh, at a significant level where we previously dipped down. Go through that in a second. Hide the levels for a second. And one thing I noticed though with the daily candle, it was more of an inside body candle, um, which leans not necessarily bullish or bearish. It's more neutral. It's what you consider your no your average bull candle, right? There's no significance to it. But what's significant is we did close on a higher high compared to last week, higher high and a higher low compared to last week, which is amazing. One thing you will also see is we are back in our range here that we've been in for a little bit here towards the middle, which is a fairly good thing. Our 590.75 continuing to be a very significant level. You'll notice a lot of the levels haven't changed too much, just some minor tweaks that I've made to them. Once again, I'll mention it at the end of the live. I'll post it in our market overview channel. So for our weekly ranges here, again, weekly ranges are just based off of this option straddle technique, just to kind of see where market expectations are. So for our expected moves, we're looking at a little bit lower than last week's, which was near 603 area. We're looking at expected move around 608.65 ish and 583.25. So again, expected moves, price doesn't necessarily have to touch it, but it's just a good baseline of where price action might move within the week, right? One thing I noticed, I had this channel going on for a little bit here to help me identify the head and shoulders that was playing out last week, or last week that we were waiting for on the last overview. One thing I noticed is we had a few touches of the trend line here, but we aren't out of the woods as far as our head and shoulders pattern. So of course the head is here, and here's your shoulders, right? And this is the other head. But if we are not having some solid closes over our 590 level here, um, this is just a look above and failure, and we can continue on the downtrend, right? With price targets on the trend line that we have here. So I'm not saying that it's bearish, let's short the market, but just wanted you guys to kind of be aware that we still kind of have that head and shoulders playing out here, at least on the daily chart. What we see here is, more of a strong selling pressure, a little recovery, but until we close above 590.75, um, we're not out of the woods yet for any bearish pressure. As well as if we wanted to look for any confirmations below, I would look for 585. 584.45 is my line in the sand, I would say. It's pretty much where our neckline is of our head and shoulders. This is the neckline of the head and shoulders. So if you do want to you know, be very sentimentally bullish on bearish on SPY, I would look for 484, 45 failures before you even consider, seeing any continuous downtrend on SPY. Um, as far as pathing goes, I have a few paths that I see that can take place here. So once again, this 590.75 level is very significant. I will bring it up a few times here. So on our more neutral trend, I can see maybe some retest of 590s and retest, whether it will fail or consolidate in the range, but more of a breakdown retest, and then we just chop in this range for the rest of the week, right? So that's your neutral, which is good because we're still in our pivotal zone here. We're still above the strong and the weak. Remember, our strong, pivotal, and weak are essentially where I would dictate a change in trend, right? So we're holding over the strong pivotal point is very bullish, and below the weak pivotal point is very bearish, right? And this goes for a weekly close, right? So let's see where we end up on Friday. If we end up over here or under here. So for bearish movement here, I'm looking for some type of look above and fail like we mentioned with the head and shoulders playing out. Just a recovery, look above and failure at the 590 level. Maybe some chop consolidation, but the real key thing here is look for some type of bounce around the 584 level because it's a very strong line in the sand, right? So a better entry to go short would be some type of bounce off of here before following down further, right? And we have, quite a bit of some room to go down. I would be more cautious on how far down you go. I like 580.39 because we have a nice little consolidation zone here. Price stayed above it, stayed within it, and continued to retest that level, right? So we, if you do look for any, bear side, I would still have 590, 580.35 as an exit. If the market continues to die off, so be it. You took your profits off the bounce, retest, entry, and then we shorted, right? So you don't look at what the potential gains are. You really want to look at what you made out of it, right? Right. And then let's talk about some bullish sides, right? So let's get a little bit more positive. So for bullish pathing, um, of course we're holding over the level, right? I'm gonna mention it again, 590.75. We broke above it. So maybe some retests off that level, and our resistances here will be our little slowdowns along the way, right? Which I will provide for you. But we're looking for some retest around here, maybe a little smaller bounce before any upside. I don't want to be I guess pessimistic in saying that I don't think we hold over the strong pivotal point yet. Maybe it will play out more later on towards the end of the month for some like further movement up towards the highs, right? But being able to at least recapture this strong pivotal point, which is 595, is going to be really key here if we want to continue having any bullish pressure pushing the market up, right? Another thing that could play out here is we can have a really strong open and a retest of the pivotal point and break out of this range, which is essentially what SPY's been doing, right? So we've seen a lot of intraday. Of course, I'm looking at a daily chart, right? But intraday, been seeing a lot of either we're starting the day down, we have some relief bounce, we bounce a little bit, we retest that area, and then we break out, right? So SPY's been having some massive moves lately. So For me to say that if we open strong, retest our 590 level, and then have some stronger breakouts is not out of the woods, right? Even if we open strong, we can just retest all of these resistances along the way for that close around the strong pivotal point. So if we move on to QQQ here, starting again with our weekly candle, same thing that I mentioned before. We have a little bit of a hammer candle here, which is pretty nice. The only thing is our wick seems to have just closed below our body of the previous candle. So it's not inherently bearish or bullish, but it's not as strong as SPY, I would say, in that aspect, right? If you look at our uh, daily candle, however, we did have some closes above both of our pre weekly candles, daily candles here. So our Thursday close were above it, our Tuesday close were above it, and our Monday, which was just a chop zone, we're all the way above it, right? So we're in a new high in the week, right? Of the week, we closed at a new high in the week, which is really good. One thing I wanted to notice as well was on the weekly chart here. Uh, Anytime we're looking at some strong bull trends that take place. Ooh, let's close that. Technical difficulties. All right. Anytime we're on some strong bull trends here, all right, and we have our pullbacks, we want to retest areas where pretty much the bull trend had a reversal or a slowdown, right? Which is going to be around this area, you know, for the time being, right? If we look, we have to look in the past. We look in the past around this area as well, but any holds here, this is our July dip. Any holds over this level is just inherently bullish for QQQ. I'm not considering any type of strong bear trend until we start having weekly candles close below our previous high in the structure, right? So although it's not as strong on the weekly candle, daily wise, it's not looking too bad. So if we look at our levels here, so a little bit of a wedging here that's happening. We have had consistent lows and a slope with a sloping resistance here, and our support being our previous area of consolidation, similar to SPY here, where we're supporting off of this. SPY just had more of a sloping support as opposed to QQQ having more of a horizontal support. Um, for a breakout, I would look for any strong bull trends upwards. I would look for like this 590 level close above here. Ideally, would like to have had our Friday close above it, but closing near it is not as bad as well. Um, it's pretty much the center of our little range here. If you can see the little green box that I have here, this is just our price range, right? The push above here is just our Christmas rally. Well, this is our Christmas rally. This was just right after Powell's huge plunge, right? So this is pretty much our range here, our value range in QQQ for the time being. So unlike SPY, where SPY had a close on Friday somewhere in the middle, right? QQQ is just below that. Hence where the 520 level is, right? So I want to see us break out of this wedge that we're having before I see some stronger uptrends. That doesn't mean that there's like some type of short because I personally don't see any major short patterns with QQQ at the moment. I just really want to see us close above the 520 level. One thing I noticed on the hourly chart here is the only pattern that I see, which is very bullish, right? So the only pattern I really see here is just a nice inverse head and shoulder trying to play out here on the 1 hour chart. With our neckline being our weak pivot point, we closed below it, which was a little scary at first, but we obviously closed above. We ended the week above it. But one thing I do see here is a head and shoulders that's trying to play out. So I would like to see a pullback and maybe retest this 550 515.67 level uh with our test at the 520 level, and that's what this line here is before any breakout. Um Unlike SPY, I with QQQ when it runs, it can keep running, right? So I wouldn't go so like optimistic or pessimistic to say that we can't go over the strong pivotal point, but it is always just a resistance here, right? So yeah, if we break above it, so be it, and you're in it, that's amazing. You got in good, right? But really, ideally, a break over 520 to go long here to 523 ish, 524 is a pretty decent return in my opinion. So that would be more of a safer test. If you can make it off the retest here at 515.67 for the breakout, that's even better. So if you can spot the bounce here and then break up, that's amazing. Otherwise, a retest here and some closes over 520 is a better opportunity for a long, at least in my opinion. Say, all right. As far as patterns, I didn't really see anything for the bear side, in my opinion. I would really just look for our failures of our support here, um, breaking under 515, breaking under 512.78, and of course, really strong failures at 510 here because this is essentially where we had that strong sell off retest. So if we can fail right before this gap up that we had, so if we have some failures here, then you can really look for some downside. But with price being 518, it's a little bits away before we can look for any bearish outcomes, right? For IWM, there wasn't too much I can say here. One thing that I do want to say is it is playing out a bear flag, right? So our last live here, I mentioned that if we aren't able to break above the 50% of this drop, which is this line here, that we would assume that there would be some type of consolidation here to close the week off. Essentially, that's what happened here. So for any strong like bull trends to occur here, I would look for any closes over 224s. I think I have it at 16. So any closes above this strong pivotal point would be leaning more bullish, but there's so much resistances along the way. So risk to reward, I don't see the upside being a safer path. Not to say that we should just short the market. I honestly would just let this play out here, um, to see how we close off the week. I wouldn't personally trade it, but if you do want to trade it, let's look for some failures at 223 here. Um, essentially, this is just going to be a retest of our 224 level failures. Retest here, maybe a small bounce before we actually break out of this wedge. Again, even if we do break above 224, we still have a chance around 225, 226 area for another rejection and then break down, as well as we go up here, chop around, and then another breakdown. So the long side does not look ideal. So I would just look for us to just break this little channel that we're in our bear flag before entering any shorts, right? All right, let's move on. Go through my little list here. Um, so before we move on to the mega caps, because I know you guys all want to know, let's just go through some basic market overviews, right? So high yield, high yield corporate bonds is essentially our risk appetite in the market, right? So this is really essential to be looking at here once in a while when you get the chance, just to see what the sentiment of investors are, right? Are they more risk on or risk off? Risk on is more geared towards tech, right? And if you see here, I was drawing initially a bear flag. Excuse me, I'm sorry. Initially a bear flag, and it kind of turned into a channel here, right? We're well above the 50%, which would be around here. We supported at our 77 level, yeah, around 70s, 78 pretty much. We supported over here, which was good. This was one of my supports. My pinks are essentially support, and my blues are essentially resistances in a way, but more so an area where price will slow down a little bit, right? So as you can see, we had a little slowdown right here around um, 80, right? 79.99, which is just 80. So we're, this bear flag turned into somewhat of a little upwards channel here, which is good. It just essentially means that you know we have tech leading the market at the moment. um this is a good indicator to see where 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 investors feel comfortable putting their money, right? If we start seeing some huge sell off in this, people are going to put their money in more like safer stocks like um, Costco, Hershey's, Walmart, things of that sort. I have a little list here: Pepsi, Coca Cola, like all these stocks right here are your defensive stocks. These are your high dividend yield stocks, your high in demand products that they sell. That even if we had a global pandemic, everyone's buying toilet paper and toothpaste, right? So those tend to do really well when the market seems more scared, right? So this is really a key indicator to look at whenever you have the chance. Um, and then one more thing I wanted to look at for overview was our SMH. I know I briefly touched on it before, but I just wanted to mention that we're still on this little wedge that we have here, so we haven't broken out yet. But one thing I did want to note was last week I mentioned if we can have some closes over 250, we might see some really huge momentum in Nvidia, which essentially what happened here. I wouldn't say this is the primary reason. Um, if you didn't know, there is a CES, I believe it the acronym is, meeting on Monday night at 9:30 Eastern time, and essentially the CEO of Nvidia is going to be leading that. So a lot of that pump that we had on Friday was just early anticipation and excitement. That kind of really ran the market up. So we'll see how it looks either tomorrow or Tuesday to see if the market can hold Nvidia that high up, or we have any failures there. But I just wanted to point out here, 250 is a really key ideal level. Anything once we start closing above 250 here, we can start to look for higher highs in our major semiconductors. And again, the ticker is SMH. As far as sectors, I didn't really see too much worth noting. We had some, of course, last week I mentioned a lot of the news there was geared towards the finances and the real estate sector. So we did see some pumps happening earlier on, and then leading to a sell off towards the end of the week. Uh, with XLF, I'm just really looking for any holds over 47.44. It's really good for our financial sector here, with our next resistance level being 49 60 ish. So I just like that little bounce recover that we had, especially with the news here. XLY. This is something I noticed as well. So XLY, consumer discretionaries. This is essentially the ETF for what people spend their money on, right? That's a good way to put it. Uh, so we had a huge sell off for quite a bit here. It found some support in our demand zone here, and we're starting to bounce over, which I like. The reason I'm bringing it up, I'll get to towards the end of the video, um, just to kind of give you an early glimpse of what we're looking at. Right, we had a huge downtrend that we finally trying to find some support off of. Right, so this initial breakdown here is just a recovery and then continuation, as opposed to here where we found some support in the demand zone. Any failures here around the 215 level, 218 level is going to be, not really good for consumer discretionaries. So us having a little supportive bounce here is really good. And this is your Amazon, your Tesla, and stuff like that. Those are your major players in this. Let's see, XLV, huge downtrend. Nothing has changed. If you are playing any penny stocks that are in the health sector or large caps in the health sector, it is being broken down hard here. So if you do want to look for some good entries, um, look for any bounces here. We have a slight bounce here with our resistance at 183.83 ish, and the next resistance at 140.68. If we start closing above this, we'll start to attest we'll start to retest this channel. Um, so I would just be mindful and on the lookout for that if you do play any stocks in the healthcare sector. Yes. Yes, most definitely. No, thank you for that input. I appreciate that. Quick look at our XLP. This is your defensive stocks, your consumer staples, your Costco, your Walmart, Coca Cola. Everything was on a huge downtrend here. We're finding some support here towards this area of consolidation. So I just wanted to point out any holds here above the 77 level, 77.85 is really gonna be ideal this week. And like I said, I'll get to it in just a moment. Um, Actually, I'll get to it now. That's the next point. So our next point. Ooh, 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 ooh. Hello, what happened to my taskbar? There we go. All right. So our next point is just the news for the week, right? So first and foremost, on January 9th, on Thursday, the market's gonna be closed. It's a remembrance of Jimmy Carter, our 39th president. He died last Sunday at 100 years old. So rest in peace. Um, and it is officially a federal holiday, so we'll have that day off as far as trading. So for our news sector, I will try to get through it as quick as possible because we do have quite a bit of news this week, right? Uh, I'll just try to focus more on the key factors of the market, right? So our reds and our orange. First and foremost, our PMI. Just like last week, I'm gonna go with our positives and our negatives. All right. So if this is positive, so we're looking at some boost in XLP. And overall, this will be good for QQQ and SPY. Right. So this is going to be a nice little pump that we can, hopefully expect to take place. This is basically um, just going to be measuring the health of our service sectors, like consumer services, right? So Costco, Walmart, stuff like that, right? For the negative side, we're looking at XLY and XLP to have a little bit of a drop off. You might see a little bit of effects in QQQ and SPY, but it won't be as good or as great as if it is positive, right? So if it's positive, just means that people feel very comfortable spending their money and doing stuff, right? And just the economy is healthy, right? So our next news here is going to be our jolts and our ISP service PMI. So basically, with this the ISM service PMI is basically just a, a judge of economic, I guess, activity, right? So like essentially positive and negatives are just going to be, is the economy good, or does it or is it not good, right? That's the best, most simple way to do it. If people are putting money into the economy, or are they bag holding, right? That's essentially what this is going to be looking at. So for our positives, we're looking at a boost in XLY, our discretionaries, XLI, which is our industries, because they're going to be booming since everyone wants to put money into the market. Industries have to follow, right? And this will definitely be good for SPY and QQQ. We will see a pump in both these markets, right? If this is good. Um, ooh, ooh. We will also see up. Oh my God, I closed it. That's my bad. All right, so XL, XLY, XLP, and we'll see a boost in XLF, our financial sectors, right? Because people feel comfortable spending their money. Um, However, on the negative side, for the negative side, we'll see TLTs dip down, and SPY will also dip down, right? So this is just a lack of confidence in the economy, right? So this essentially is what's gonna take place based on news, right? For our jolts here, that's also gonna be a really significant one. If you ever put on the news pre-market, you'll see that this is talked a lot. This is just basically our labor strength, um, our, and I would not say employment rates, but more so how many stable jobs are continuing to grow, right? Um, so for this, we'll see some boost in our XLYs. And oh, that is terrible drawing. XLYs and XLPs, right? Um, Essentially, people are just feeling comfortable spending their money. All these consumer driven stocks, Tesla, Apple, whatever you can think of, right? These are all just people want to spend money. That's essentially what this is going to be, right? People have the money, they have a job that's backing them, they feel comfortable with the economy, and things will, they're going to spend a little bit more, right? If this is bad on the negative side, the negative side, nothing really much would happen here. You might see a little pullback in the market. Nothing too major. As far as SPY and QQQ, SPY might have a little bit of a boost. If it's positive, but nothing too major. It's more of a overall look at individually how the economy is going to be affecting you, right? For our next one, it's going to be our ADP here. So positive and our negatives. This just measures the employment in like private sectors. So something positive here will have, if you don't mind, thank you, whoever muted there. So yeah, for a positive, you'll see a boost in XLY and our XLP consumer stocks, right? That's going to be a trend for the week, right? Our consumer stocks. How do people feel comfortable spending their money in this economy? Do people feel like the economy is stabilizing, right? That's going to be the key thing this week. Um, and with a boost in XLY and XLP, you definitely will see a boost in QQQ and SPY. SPY will see both of these will see a nice boost if this comes out good, right? We're gonna see a nice little gap up if we can hold it. Now the price will have a nice body long body candle, right? If if this comes out good. As far as for the negatives, um you're just gonna see a drop in TLT. Our bonds are gonna drop. And it just signals that there's weakness in the labor market. Let's see here. Where's the next? Oh, there we go. All right. So next thing is going to be our FOMC meeting minutes. This is going to be a key player this week. We will see some nice movement in the market depending on how this goes. So, of course, with any Fed meeting, it's gonna we're gonna talk about the rate cuts, these hikes, these pauses. Everyone's going to be talking about it. That's going to be the talk, right? Um, So I would just be on the lookout for this time. If you're trading, I would not. Simple as that. I would just at least watch the market and see how things react before you decide to just jump in before or after this starts, right? Personally, at 2 p.m., I will be done for the day. I'm not going to even risk any of my capital after 2 p.m. Uh, but for our positives and our negatives, right? So for our positives, we're going to see if by the way, positives are going to be where the feds feel like our economy is good and they don't need to change rates, right? So you'll see a boost in XLRE, which is our real estate sector, and a boost in XLF, right? Because both these are our mortgages and our banks, right? They're gonna love that everyone feels good taking out money for loans, racking up their credit cards, getting new homes. Everything's gonna, all these banks are gonna capitalize off of this, right? As far as negatives though, if there's a negative, meaning the economy is not doing really well, and they're thinking of either reducing or pausing any rate cuts, um, or well, pausing any cuts, like reduction in rate cuts. I'm sorry. So like if they're gonna keep the rate cuts where they are, um, that is essentially the negative, and we will see a huge boost in SPY and QQQ. All right, that means all these stocks people are just gonna be pouring their money into, um, uh, stocks because the interest rates are lower, and when interest rates are lower, tech companies tend to thrive because they're able to take out more capital to grow the business. So these ETF sectors will see a definite boost if it goes well, right? If Powell talks about any pausing rate cuts or any hike or not hiking rates, right? The next thing quickly is our non-farm. I think yeah, non-farm. Yeah, so our non-farm. is going to be another big news for the week. Um, that's going to be for the positive side. Well, essentially, the non-farm is just our. It's the most important news regarding employment for the month. Like it's the most significant one. Um, it basically measures, you know, if companies are feeling comfortable opening new positions, um, and increasing their labor market. Uh, and this is just across many sectors. So for the positive, we'll see a definite boost in XLYs, XLPs. So your consumer staples are always going to go up. People feel comfortable spending money. SPY will definitely go up, as well as QQQ. But the only downside to this is, if this is the case, then the feds have even more reason to not adjust interest rates, right? Because that means that there's more jobs, more opportunities. Why cut the rates, right? So we might see a pump, but if that's the case and the feds are confident in our economy, then it will be soon followed by a down, like some downside in the market, right? And as far as negatives, we're just gonna be looking at the TLT going down, which is just I would say more loss of confidence in the economy. Um, this is where you're gonna hear talks of recession and all this on the news. Just don't listen to this. This is just to sway your mind and throw you for a loop, right? But essentially, if we start seeing any negatives in the non-farmer, that's really what that's what the talk's going to be. It's going to be our TLTs are down, and every person that is going to talk about how we are approaching or not approaching or almost out of a recession or whatever the case they want to be, right? So this just a fun little fact that you're going to hear. Um, as far as that, our unemployment rates, of course. Um, I mean, the only thing that I really look at it for the unemployment rate is if it goes down, right? If unemployment rate goes down, that's a positive. You're gonna see SPY, and QQQ have a nice rally. This is usually what you see when this comes out. If it's positive, you definitely see a rally every single time. There is a nice long body candle, right? That's what I look for. For the negatives, I mean, you're gonna see a slight reaction in TLTs. It might go up a little bit, indicating that people feel good in the economy and they want to put more money into the economy. Um, and then the last thing right here is just a preliminary consumer spending report. This is essentially going to affect the XLY, and XLP are discretionary, right? So, consumer confidence. How confident do people feel spending their money? It's just going to be an early look before the official numbers come out, right? Uh, if it's positive, these stocks will go up. However, if it's negative, not only will they go down, but you will feel it in SPY and QQQ. They will feel the downward pressure as well. However, it's up. It's not going to affect as much to these ETFs. It's not going to have a huge effect. And then next thing is, before I get to the questions, how am I doing on time? Okay, got a few minutes here. Sorry about that. All right, so all right, yes. It's it. No, it's okay. Um. Oh, it's gonna be. Oh, so the channel will be right here under momentum scanner. Is where we're gonna temporarily hold it for the time being. It's the channel right below this before we officially decide to go on to having the bot in the server. Go to. So what? Yep, and then it reads out whatever you're looking at. Right. All right. Okay. Any other questions anyone may have? I'm just gonna go through quick little touch of our Nvidia, Tesla, and Apple. It's gonna be real fairly short. There's not too much that I wanted to point out with it. Um, for Nvidia, our initially we were really looking to see if we can hold over 139, 50 here. We ended up gapping over it and breaking out of the channel that we're in, and we did not even test our small little value gap that we had below here, or I'm sorry, the small shelf here, which essentially there was limited price action as you can see here. So if we did break underneath 136, it was a fairly smooth drop down towards our 133 level, 132 area. but of course we gapped up over that, so we can, for now I'm remaining bullish on Nvidia. With the breakout of the channel, with the anticipation that we're having. Normally when Jensen speaks, the CEO, normally there's super huge hype over it, and the stock will run up and then it falls down, right? Either shortly before or shortly after he has his speech. But this is slightly different, right? Because essentially what the CES is, it's just going to be a lot of huge tech companies talking about what are their new innovations for the year, right? So you have Samsung announcing that they're gonna speak about their new phone at the end of the month. Talks of a new graphics card, stuff like that. So it hopefully will continue to hold the trend. It's If you do want to short, I would not entertain any shorts unless, I mean, squeezing a short in maybe 142, you can get in 142.50, you can get into a nice squeeze short to at a retest of 139. But um ideally what I would see is, if we do have any pullback, it would be a pullback around the resistance here before a bounce, or even a pullback here before a bounce. For shorts, I don't see a huge risk to reward here. Um, as far as shorts, you're looking at this of a range, as opposed to longs, which if you are able to catch the reversal for this bounce here, you have much more potential in a longer candle reward wise, right? Um, let's see what else about it. Yeah, so really 139 here, holding over here is really key, and holding over 140, 140, area, which is our previous resistance, that's gonna hopefully turn to support if we can retest it and find support there. um so it's interesting to see how it plays out this week, especially since sun Monday night we'll have the big meeting, like I said, the CES meeting, with Nvidia being the second largest large cap that we have in the market. It's going to be quite a mover, right? And then I'll move on to Tesla. Obviously, it had a little bit of a pullback. I know it's funny for me to say, right? Pullback, what, almost $100. But if you just look at Tesla, it's it's literally just up, right? It's from the moment it's just constantly been up. So it has a long way before I start feeling bearish on it. I would say break under 139.50 before we can really confirm of a change of a trend. Even then, let's go to an hourly hand. Even then, any shorts under 139, which would be ideally more safe of an entry for a short, um, you have a few supports along the way that you can look for on an exit here. With 130, 140.33, 126.75, and 316 being previous supports. Um, what I see here, pathing wise, this is quite interesting. So what we could have happen with Tesla is our 414 here are going to be your key point here. We really want to hold price over this level, right? So we could open up with price just breaking above here, and then maybe a retest around here before a continued breakout towards our highs. But for me, an ideal play, which if it plays out, it plays out. If it doesn't, that's fine. um Ideal play here would be a retest of 515, maybe some pullback, or even if we don't retest and we just immediately have a little bit of pullback here, um and support off this 392 level right around here where we had a little bit of consolidation here. If we can have some type of bounce around here and then go long towards 415, that's good. As well as an even better play for the long term here, I'm talking, would be a 359 bounce and retest. If we can find price around here with some supportive bounces and maybe a little consolidation here, going long here, like a month, 2 months, 3 months out contracts, would be, I this would be the ideal entry for that around here. If we can find support here, yeah, of course, it's a huge downtrend, right? That would have to take place for that to happen. But on an overview of the whole entire trend here, our only significant pullbacks have been our dip post um post Powell's, talk, and our Christmas sell off, which happens after every at the end of the week. That happened on Friday. That's the pretty much the end of Christmas sell off that typically happens with consumer stocks like this. Uh, so we haven't had a real correction. So breakdown and retest around 359.50, which is where our previous high resistance were, would be a nice area to find support, rebalance the prices, um, and premiums, and looking for a better entry on the long, right? Because right here you're playing with inflated run ups and inflated pullbacks, right? So to have a nice pullback here and some type of chop or consolidation around the 359 level as a strong support is an ideal an ideal point for a price to settle for you to look for some better entries on a long, personally. But like I said, there's still a potential chance that we just open up over to 15 and we just, blue sky breakout. But we will see how the week plays out. For me, long wise, I'm looking at a 359 50. Pullback and retest is probably my ideal entry for a long on Tesla. Um, as far as Apple, same thing. Huge. Our only pullbacks are those times of the year. Obviously, huge trend. You can see some arrows here that I put it here, which is essentially our demand zone that we finally broke out of. And we had a huge downtrend here, but I am still not bearish on Apple. We were on a massive uptrend here. These are just small minor pullbacks, right? Price corrections similar to Tesla here. Um, if I do want to entertain the idea of a short, I would look for 241.69 as a breakdown. Um, because we have a little bit of thin structure right here, right? Price just moved in one direction. Essentially, that's what thin structure is. There was no settling of price, right? So if we do have any breakdowns under 241.68, would be probably the only thing I would do to entertain a short, with price being able to bounce anywhere in this zone, right? So that's why I don't think shorting would be the ideal scenario here. For me personally, I would look for longs. So our 245.46 level is our 50% drop of this at this point here. Uh, Ideally though, the best entry would be around 250, 246, 246.25 level, because this is where we had support at one point, multiple touches, one, two, three, four, five, multiple touches, um, where price kind of found support here. So if you do want to go long, I would look for either a retest here, maybe some pullback, and then a blue sky break up off of this with a lot of thin structure here, little thin structure all the way up here as well. I have this thing zoomed out, but a lot of thin structure here, and also our demand zone here. So, breakout, retest around this area. This would be your entry for your long at 246.25. You could either exit around 250 or look for a retest of this demand zone here, or yeah, our demand zone that is acting as supply at the moment until we can recapture it. And then we have a retest towards our highs because we also have another thin structure here. Um, and as far as Apple goes, any other questions or tickers that anyone wants me to go through quickly before we end the live? Hope you guys enjoyed it. Went through quite a bit. any questions before I go ahead and end the live here? No problem, see. Alrighty, I'm gonna go ahead and end the